Now guys, we're going to talk about what are imbalances. Now imbalances, they're very simple. So essentially when the market has a quick aggressive move, we're typically going to see imbalances in price. Imbalances, they kind of act like a gap. So when you see like a strong aggressive price move, you're going to see that there's specific areas on the chart where the price never really retested. Imbalances are areas where we can they also act kind of like an area of support and resistance, to be honest. And that's kind of how I utilize most of the concepts. So when we talk about imbalances, when we talk about supply and demand, when we talk about all these concepts, these are all essentially, the way I view them is all some form of institutional, quote unquote institutional, right? Some sort of institutional support slash resistance levels. And the more confluence of events that you guys have at your disposal, the bigger and the stronger that level is going to be. Now, I'm going to go ahead and show you guys what an imbalance is. And it's essentially this right here. So it's a 3-candle formation where you have, let's say, this candle here, and then you have this big drop in price. Then you have that third candle that closes. And look how there was no price traded in between this candle's low and this candle's high. This right here is our imbalance. Essentially, this is kind of serves as a gap. So if you guys are familiar with equities and stock, you know, sometimes the market, let's just say a stock, for example, is at $10. And then that stock the next day has a drop down to $8. That price difference from $10 to $8 is a gap. Similarly with FX, we have these imbalances which serve into similar concepts. Now here's a bullish imbalance where we have, it's the same formation where we have a candle right here. It's a 3-candle formation. This candle pushes up and then the third candle closes. This area from this candle's low to this candle's high, this area of price was never tested. So imbalances can kind of be used as, let's say, you know, you want to get back on trend. You can look to play the gap and let's say you start to buy it. Similarly, with the order block, you can use 50% of the high to low, so this area right here, and then kind of place a buy limit there if you are bullish. Now I'm going to get into stop placement, all that in part 2 of imbalances, but for right now I just want to illustrate to you guys this concept overall. Again, here's another example where we kind of have a big, and you'll see imbalances when we have a very aggressive price move. Over here we have an imbalance right there from this candle's low to this candle's high. This candle doesn't even have a high, really, it just has like the opening price. But this whole section in here would be considered an imbalance. Also right here, from this candle's low to that candle's high, right here is a price gap or quote unquote imbalance. And here's a good illustration of what I mean by they can be used as support resistance. Look how the market had a very aggressive move lower, and we start to see right here price comes up. And the blue shaded area is from this candle's low to that candle's high. And look at how price is respecting this area as a form of resistance. It even came up here on this crazy wick, came back into it, and by ballparking it, probably right around the 50% mark right here, and then kind of just took down. So this is, again, is something that we can utilize in our trading. Now, just quick reference point, you can automatically see that this right here was a reactionary block, because look at how this candle right here was a bullish, was a bearish order block, because this candle kind of broke down, and we have an imbalance as well. So this is what I mean by a reactionary block, where price kind of confirms at, let's say, a resistance level, and then we have an imbalance form. Because remember, one of the rules for the reactionary blocks was ideally have an imbalance. But again, that's neither here nor there. It was just funny because I'm looking at it right now and automatically my eyes kind of just tell me like, oh yeah, this was our confirmed reactionary block right here. But yeah, imbalances kind of act as good support and resistance levels. And inversely as well, over here, look at how price had a very strong aggressive run here, and we have an imbalance right there. Price has this high right there, and price has that low in between it. It's quote unquote a gap, and you see how price kind of fills it in right down to this low, and then we end up reversing and price makes a higher high. So again, guys, all these concepts, right, they all have the way I view things, with all these institutional concepts and all these quote unquote different like smart money concepts, I just use them all as the basis of support and resistance. They are just more accurate, and honestly, they are more accurate than what you have with retail concepts in terms of support and resistance levels, especially when you have proper framework and when you kind of understand where the market is likely to go. But yeah, guys, that's really what all imbalances are. That's kind of I'm giving you guys how I use everything. So some people have like, voids and all these other things. I just use imbalances as, first of all, number one, confirmations if there's an order block forming, as well as another area of support and resistance. Now I'm going to give you guys, when we start talking about when we start putting it all together, you're going to see how I prefer when I see an imbalance and order block forming, and if the imbalance forms within, let's say, a discounted market, let's say an OTE fib, so in the 62 to 70 area. And just ballparking this one right here, you can automatically tell if you drew a fib from high to low, this imbalance closure would be an OTE entry, and higher high was met. But again, we're going to be getting into all that down the line. But yeah, now the next thing we're going to be talking about is supply and demand flips, and we're going to talk about that in the next video.